stocks in the United States dipped on Tuesday, adding to an early week slide as investors digested economic warnings from bank titans and considered the implications of impending Federal Reserve policy. The S&P 500, GSPC, fell 1.4%, while the Dow Jones Industrial Average, DJI, fell 1%, or over 350 points. The Nasdaq Composite, IXIC, which is heavily weighted toward technology, lost 2%. Wall Street struggled to rebound from a disaster in Monday's session, when equities fell as investors digested the first of a week's worth of economic data. According to Bespoke Investment Group, the S&P 500 recorded its sixth down day in the previous 7 trading sessions. On Tuesday, the major Wall Street bank executives expressed pessimism about next year as inflation weighs on consumer spending. Bank of America's CEO Brian Moynihan told investors at a Goldman Sachs financial conference that the bank's analysis indicates negative growth in the first half of 2023, but that the contraction will be modest. Separately, Goldman Sachs CEO David Solomon told Bloomberg that he expects economic growth to decelerate, as well as reduced bonuses and maybe job layoffs. Economic data readings have indicated sustained resilience in many sectors of the economy, triggering considerable market focus on the likelihood that the Federal Reserve will continue to hike interest rates over the next year. Following 4 consecutive 75 basis point increases, Fed officials, including Chair Jerome Powell, have broadly indicated that the central bank will change to a half-point rise at their meeting next week. However, last week's employment data showed solid job increases and robust pay growth, which is the polar opposite of what the Fed wants to see in its fight against inflation. A modest hike would signal a new phase in the central bank's tightening campaign, but increased wage pressures could lead to more officials lifting their benchmark federal funds rate above 5% next year, as Wall Street presently expects. In light of the numerous releases, Jim Reed and colleagues at Deutsche Bank said in an early morning note Tuesday, expectations of the Fed terminal rate priced for May 2023 moved up by 9.5 basis points on the day to 5.01%, crossing the 5% threshold again. That's a significant movement from where it was shortly before Friday's jobs report, when it hit a low of 4.83%, and it suggests that most of the advances lower since Chair Powell's Wednesday speech have now reversed, he added. On December 13, the opening day of the Fed's 2-day policy meeting, officials will get another reading on inflation when the Labor Department releases the Consumer Price Index for November. According to Mike Gormley, equity institutional sales at J.P. Morgan, December has gotten off to a rocky start in the markets as investors unwind of consensus macro positions this year, which has ensued since the cold CPI reading mid-November. Oil prices continued to fall in commodity markets on Tuesday, with WTI crude trading at $74.43 a barrel. The latest drop in oil prices has occurred despite recent steps by OPEC and its Russian-led partners to maintain output cutbacks, and as Chinese officials have partially lifted COVID curbs that have degraded demand from the world's largest importer. On Tuesday, the yield on the 10-year Treasury note in the United States fell down to 3.52%. The value of the dollar increased. According to the Wall Street Journal, PepsiCo, Pep, wants to cut hundreds of jobs at the headquarters of its North American snacks and beverages divisions. Other corporations, notably Walmart, WMT, and Ford, F, have cut white-collar employment in response to economic uncertainties. In other news, GitLab, GTLB, shares increased 9.5% after the firm reported third-quarter earnings that above Wall Street estimates and upgraded its revenue target for 2023. According to the Wall Street Journal, Fanatics received $700 million from a group of new and existing investors in a round that valued the company at $31 billion. According to Bloomberg, Apple, AAPL, wants to dial back ambitious self-driving plans for its future electric vehicle and postpone the car's planned delivery date. On the political front, Georgia voters will go to the polls Tuesday to see if Democratic Senator Raphael Warnock can hold off Republican rival Herschel Walker. Despite the fact that Democrats have already secured control of the Senate, both parties have invested significant resources into the election. Senate seats only come up every 6 years, with only 1/3 of the chamber elected each time, Reed and colleagues at Deutsche Bank wrote in a note. A victory for either side would make it easier for them to gain control in the 2024 and 2026 elections as well, since that Georgia seat wouldn't be up for election again until 2028. Meanwhile, President Joe Biden visited TSMC's TSM, Arizona plant on Tuesday, as the Taiwanese chipmaker announced plans to increase its planned investments there to $40 billion. According to the White House, Biden was joined in his visit by Apple CEO Tim Cook, TSMC founder Morris Chang, Micron Technology Inc. Mu, CEO Sanjay Mehrotra, and NVIDIA, NVDA, founder and CEO Jensen Huang, among others.